Good morning, everybody. Coffee. Thanks for the opportunity, Paul. Thanks for inviting me again back to your conference, and Commonwealth Bank for hosting the day. Like I said, Ben Fargher is my name, and I'm with Cargill in Australia. What Paul asked me to do today was to come and give a brief update of Cargill. Brief, he said, but he wanted me particularly to focus on some of the sustainability work that we are doing globally and how it relates practically to Australia. So that's what I look forward to doing today. I do want to give some project examples today because several of the speakers this morning talked about the culture in agriculture, and as people in this room will know, people in agriculture really believe often, or mostly, I think you'll agree, that actions speak louder than words. They want to know practically what we are doing to make progress in our businesses and our communities. So I'm going to give you some examples of projects we're doing and how we're relating to our customers, both ends of the supply chain in that regard. I also do want to talk about capabilities and some of the partnerships we have in place along the value chain, because despite Cargill's scope and size, we do not believe that we can do it ourselves. And so partnerships are going to be an important part of this journey forward, and I'm going to highlight some of those today. Very, very briefly on Cargill, several of you will know the company well. Some may not, though. We are a private company. And so just to give you a little indication of our footprint, we've got about 170,000 staff now, operating in about 70 countries. It comes and goes with the Coke family and a couple of other families, but we are the world's largest private business in any sector, certainly in agriculture, and the Cargill family are proud of that. Headquartered in Minnesota, where I've spent the last 4 years. I've only got back to Australia recently, which is why it's another great opportunity for me to connect with people that I either haven't seen for years or that I don't know, because the industry has changed in the last 4 years since I've been away. Fiscal revenue last year of around 165 billion USD. In Asia, everybody in this room knows the importance of Asia as a growth region. I don't need to tell you that, but it's very important for Cargill as well. About 30% of our revenue now coming from that region. We're making a lot of investments in the region across our agricultural supply chains, not just in our traditional businesses like grain, oilseeds, beef, feed, but also in sectors like aquaculture. In Australia, we've got a diversified business. Again, several of you are very familiar with our business in Australia. We purchased AWB back in 2011, which is, I came into the business in Australia just after that to manage our country storage and handling assets and farm-facing part of our business. We've got a standalone 50-50 joint venture with the Tees family in beef. And we've got crush facilities, refinery, upcountry storage and handling, farmer-facing staff, and various other access arrangements around the country, and commercial arrangements, including with many people in this room. So that's an example of our footprint in Australia. We're looking to grow our business in Australia and into that APAC region. Our place in the supply chain, we think, gives us a unique opportunity to connect the end-use demand customer with our farmer customers, and I use the word customer intentionally at both ends of the supply chain. And so we really want to add value by connecting those two ends of the supply chain. That's very important for what we do, and that's very important when it relates to sustainability, because what we've got is a situation where our customers at the demand side of our business want, indeed expect us to help them progress their sustainability commitments and initiatives. And our farmer customers want, indeed expect us to help them practically be able to take advantage of the good work they are already doing, which is what several of the speakers already spoke about this morning in terms of being inherently focused on the sustained profitability and long-term aspects of the landscape in which they work and manage. And so for us, really it does come back to how we support our farmer customers, and we look at opportunities through the supply chain in these sustainability commitments. And I say sustainability in a broad sense of the word, not just about carbon. We do have, of course, as you'd expect, a company like Cargill, Scope 1 and 2 carbon commitments, 10% absolute reduction of a 2017 baseline to 2025. We've got Scope 3 commitments to 2030, absolute per tonne commitments. We've got water quality and volume commitments in priority watersheds globally. In some geographies, we have specific regen ag acreage targets, and then broader ESG considerations, very important, like human rights, farmer livelihoods, farmer training, DEI. I'm not diminishing the importance of those by just not focusing on them today, but Paul asked me to talk more about our climate commitments, which is what I will do today. Scope 1 and 2, as you could imagine, and many companies in this room will be making significant investments in energy efficiency, renewables, efficiency in plants. We've just announced an expansion of our crush business in Australia. It's going to be spending about $70 million in terms of operational efficiency, expansion, logistics in our crush business, and a lot of that also is at the operations level in terms of energy, solar, other initiatives. And this is happening globally. Scope 3 is a challenge for the industry. You know that. Many of our customers are challenged in the Scope 3 area. It's such a big proportion of their climate exposure. They need to be able to measure it. And even when they can measure it, they need to be able to reduce it against a baseline. And how are they going to do that? And how are we going to help them do that? And as I say, it's not just a want, it's an expectation in that regard. And so we're doing a lot of work in that area. So let me give you some examples of practically how it would work. One of the projects we set up in the United States, which my team set up, is a project called Regen Connect, really where we are working with growers in the United States, principally Midwest because of our footprint, to help them understand soil carbon levels and be able to look at new farm practices additional to what they're doing and measure that and inset that through the supply chain. It's not a carbon offset project. They're not selling those carbon credits, or we're not helping them sell carbon credits outside the agricultural supply chain. It's an inset arrangement to decarbonise the supply chain. And in doing so, because farmers, companies like Cargill, for example, food and CPG customers are at different points in the value chain, it can contribute towards our Scope 3 corporate commitments. And with that, we have an opportunity to find commercial benefit and progress our corporate commitments. A little bit about several of the speakers this morning. The commercial aspect of sustainability, which means we drive impact at scale. Because we believe if you can't resonate with the farmer and it be built on economics and productivity and profitability, then many of us will continue to run excellent pilots, but we won't scale them. So we will put out many press releases about pilots, which are great pilots and great ideas. But if we're going to really seek to make a contribution to the industry and to the climate challenges in a broader form, not just carbon, we've got to be able to scale these things. And so it's got to resonate with the farmer practically and economically, and you've got to have partnerships in the value chain to do that. So when we set up this project, for example, the first thing we did wasn't to look at a carbon contract. It was to go and work with, in this case, 100 growers across the Midwest on gross margin analysis or budget analysis of cost and revenue around soil health practices. Cover crop, tillage change, particularly relevant for that part of the world, not relevant for us as much, as you know, in terms of what we're already doing, but in that part of the world relevant. What's the cost impact? Seed, cover crops, fuel use change. So you can really be honest about the economics and the benefit or cost of these practices ex carbon, and resonate with our grower customers with that. Now, as there are opportunities in a nascent market to layer in additional revenue streams from environmental markets like carbon, potentially water in this case, biodiversity, it's been talked about in Australia and around the world, then we can do that. But let's start with the economics of things like soil health in their own right, rather than sell a carbon story. That was our philosophy in the United States. It's gone extremely well. We're learning about that. We're running different types of programs in Canada, not so relevant because, as Kelly said, some of our farming systems in terms of tillage arrangements, rotation, crop type, are very similar to Australia. And so for us there, it's more about nutrient management and reductions, not removals in terms of sequestration. And a lot of the work we're doing in Australia is around nutrient management as well, as distinct from soil carbon. So we've got several projects we're working on in Australia at the moment. We haven't talked about them publicly for several reasons, but one important reason is, as I said at the beginning of my talk, actions speak louder than words. And we want to make sure that we're talking to our growers direct and doing things practically on farm and working with expertise rather than talking about things publicly that we intend to do. Now, obviously, there's a balance there. We all understand the dynamic of being able to position our respective companies and our brand and reputation. And so we are proud of what we're doing, but there's a lot of work behind the scenes that we want to get resonance with the growers and test and learn. And several of our pilots at the moment, we're getting such good feedback from growers about what they like, but quite frankly, what they don't like. Or the fact that, for example, it might not make sense to them. Or they say we would never do that in this region, but we could do that. And that rich test and learn, minimal viable product feedback in agriculture is something that's been extremely important to us in the last couple of years, and somewhat, I would say, challenging for a large company like Cargill at times, given our business model and given the way we've traditionally done things. Some of this new environment we're in, the new partnership we're in, the new technology and startup environment we're in, is a different type of mindset to traditionally what some of us grew up with in terms of earnings models and really seeing that clarity on the IRR. And so there's a lot of dynamic around different ways of doing things and working in sprints and 90-day business plans, not our annual business planning cycle. Anyway, that's a little bit about soil carbon, United States, and nutrient management in Canada and Australia, which I'll get to in a minute. In the beef supply chain, we're running projects around soil health, corn, grazing management, rotational grazing, working with partners, for example, in a beef up initiative like the Nature Conservancy and customers like Target. And so that's a big focus for us because obviously the protein supply chain has such a big impact there. You would all know, some people in this room will be very intimately involved with the feed supply chain, feed mix optimisation, ruminant nutrition, ruminant modification technology, and of course industry is doing a lot of work on that. We have invested significantly in the aquaculture business in the last several years, and so that's not my particular area of expertise, but we've got several thousand people in that business now, working across 16 species under 3 brands, Cargill, Purina, and also the EWAS brand, which was an acquisition we made several years ago. And there's a lot of work happening in sustainability in that sector. There's people going to be talking now in much more knowledge about that than I am. But in terms of feed efficiency, in terms of co-product use in the mix to be able to drive the conversion ratios but reduce the emission profile and measure that correctly, in terms of algal oil and insect and other things that are going into the mixes now to drive sustainability. That's an exciting area and extremely important for the Asian region, of course, in regard to aquaculture, something we're pretty excited about. And the last point I want to make, just in a couple of minutes that I have, is around partnerships and collaboration. When we look at the value chain, per my chart at the start of my talk, the connection between the farmer and the end-use customer, there are various points that you need to be able to have capability to deliver that. And this is a non-exhaustive list, but if you think about access to the farmer, you think about the use of data and technology on farm, if you think about the agronomy advice, if you think about access to technology and products, not just the practices, if you then think about measurement, reporting and verification and how you actually measure this type of activity, and then you go through to the different market pathways, food, fuel, certification, carbon insets, carbon offsets, low carbon supply chains, they're related, but they're different. And can any one group be an expert in all of those capabilities? Indeed, even if you could, would it be in a company's or the industry's interests to control that value chain or seek to build your own only your capability in that? And we don't, despite our scale and global footprint, we don't think we are at Cargill. And so a tangible example, because I promised I'd be practical, is in the measurement, reporting and verification space. We are doing a lot of partnership work in that area with other companies and other industry groups and the regulator, because we do not want to have a debate with other players in the industry or other competitors about the science on carbon. We want the science on carbon to drive itself. We want to compete with our value proposition to our customers, or our supply chain business, or our access to markets, or our product innovation. But the measurement and verification, we want that to be standardised or harmonised in some ways. Now, I'm not only saying one model, because that's just not realistic, but at least some harmonisation of that activity. And why do you want that? Well, we want people looking outside agriculture in with that desire to bring capital into the sector. We want those people to look at us with credibility. They don't understand agriculture like people in this room do. And so we don't want them to look inside and say, goodness me, those people are fighting over the science of carbon. No, farmers are good at managing carbon. They have for many years, and there's a lot of good science. And we want to make science-based, credible decisions because our reputation is so important and that of our customers. So that's an important concept that we've got. And I would say a little bit for us, it's an analogy and it's not a particularly brilliant one. I'm looking to improve it, but it's like getting the foundation of the house correct. So what I mean by that, if we were going to build a house in this room, would we really all want to bring our own plumbers in? Now, my plumber's good. I've known him or her for a long time. Your plumber's brilliant, probably the best plumber in your area. So you want to potentially to get that person. If we all bring our own plumbers in, we're never going to get hot water. But let's not be naive. If Cargill wants to extend a room on top of that house and build a wine cellar, or ADM wants to paint the children's room blue, or Bunge wants to extend the staircase, companies will innovate and look for proprietary value proposition, but we need some harmonisation in the plumbing in that house. And that is not always a comfortable discussion to have in traditional grain company about how you work with partners in industry and where that balance is between the proprietary innovation and the harmonisation around standards, certification and science. You've got to have the discussion openly, and that's what we're trying to do without pretending that it's not complex or indeed we've got all the answers. So thanks for listening. That's a bit of a snapshot on Cargill and some of our philosophy and practical examples in regards to sustainability.
Thanks, Ben. We might open to questions. If we have none, I might open up. I understand you do a bit of work in the biofuels industry. Just wanted to know if you're looking at alternative feedstocks that are non-food and if you see any technology disruptions in the sector.
Yeah, thanks, Max. Well, that's an easy one to start with. Absolutely we are. Everyone involved in agricultural sector like we are is looking at the fuel pathway, not just the food pathway, given the demand, given the commitments that have been made, given the challenges at hand. And I'm talking for those, some people will be very close to it, some might not, when you're talking about biofuels, renewable diesel, sustainable aviation fuel, for example. Where are you going to get the feedstock for that? And what type of feedstock is it going to be, whether it's first generation food crops or whether it's other type of feedstock. And that space is moving quickly. Significant amount of investment going into that space globally and in Australia, as you'd be aware. And there's so much regulatory discussion happening. Some countries have got restrictions on the use of first generation feedstock food into the fuel supply chain. Some do not. Some are thinking about it. Some are going to change. So yes, we are working on that around the world, as many people in this room would be. That's on the feedstock side, but then there's the technology itself. What type of technology you've got, whether it's traditional technology that's being used now, or whether alcohol to jet technology, or other technology that's coming in the future in terms of energy use and how you get this fuel pathway. It's a big issue for the industry, and it's at times complex as well, because you can get into food v fuel discussions. And those discussions are happening at the country level, and the national and an international level as well. So very interesting. I just find it fascinating that someone that's grown up in agriculture and Australian agriculture, some of the discussions I've been involved in the United States over the last few years with some companies that are not from agriculture have been completely fascinating. I'm not going to mention any companies, of course, but people that potentially have never had an interest in agriculture before that now want to know a lot about soil health and soil carbon. And that's fascinating and a great opportunity for the agricultural and agribusiness sector and people that we are trying to attract into it.
Alrighty, thanks, Ben. We might move on to the next presentation.
Question. Just a quick question. Just picking up that carbon regulatory measurement comment that you made there, and taking that into the biofuels conversation, renewable diesel feedstock, big conversation unfolding around the definition of carbon intensity on different feedstocks. Are you actively involved in that part of the conversation as well as the soil carbon conversation? Yeah, okay.
Yeah, so look, in some ways I gave a soil carbon example because I wanted to give a practical example of the program. In another way, the problem with giving soil carbon examples is often, I speak for myself, talk too much about soil carbon. Not saying it's not important, and we are running soil carbon projects, as I say, inset focused, not offset market focused around the world. But it's a lot more dynamic than that, particularly when you get to how you measure and baseline a farm's total emissions, including not just fertiliser use, crop refuge, but also fuel emissions, how you baseline that activity and then seek to decarbonise against that activity, whether you're using some of the certification systems, as you would know, like ICC canola, where you've got state-based GHG factors. In RSPO, palm supply chain as well, you've got indexes, factors, and how you move from factors into a more accurate actual emission profile, so that potentially growers aren't faced with generic factors, but they can control their own operation and see what options they have to meet their needs in a way that's economically profitable and sustainable for them. And that gets also into areas like life cycle assessment through the value chain, not just on farm, but in the supply chain, transport exposure, plants and operations. And so we're involved in a lot of that activity, either ourselves with our own internal tools, either with industry partners, as I mentioned before, because it would make sense to collaborate on that, and in different parts of the world because the regulatory frameworks are different. So it's a long answer to a great question, but short answer, yes.
That's great.
Any more questions? Yep.
Hi, Lucy from, I don't know, is it on? Oh, yeah. Lucy from Nutrient Ag Solutions. I'm just wondering, a lot of the businesses in this room have got targets that are, for 2025 or for 2030, which is pretty close. It's around the corner. So what do you think happens for a company like Cargill? And maybe just thinking about scope 1 and 2, because scope 3 is a little bit more complicated. When you get to that 2025 year or 2030 year, what happens when you do or don't reach that target? And then is the who's setting the next target? Is it you as a business? Is it the farmers? Is it the reg bodies and government, or is it public pressure? Just because you reach the target, you'll get a high five, and then you have to set it even higher for the next 10 years?
Yeah, it's a great question, Lucy. And I probably won't do it justice in the time I've got, but more than happy to talk to you about it afterwards. I think that in some ways you're right about the pressure on scope 1 and 2 because it's within control. But in other ways, to be frank, it can often be easier for companies because you can understand your scope 1 and 2 profile and you can do things to impact it, like your energy efficiency in plants. And so, for example, with our scope 1 and 2 targets, well understood. We've got excellent data on it, published publicly, set up public disclosure and transparency mechanisms, ESG report cards on our website. We know how we're tracking, we know where we're strong, we know where we've got work to do. Scope 3, I would say more challenging, even though it might be a 2030 as distinct from 2025 commitment, just because of the nature of the exposure in that supply chain and what's outside our control and how technology is changing. And how you need to line up all the players in the supply chain. So it's a mixture of both. I mean, we have a family ownership structure that expects us to meet our corporate commitments, which is why we're working so much in the inset pathway as distinct from the carbon offset pathway, because that's contributing to our own corporate commitments. We've obviously got customers that are expecting us to meet our corporate commitments to help them meet theirs. And we want to grow our business. So we're not going to grow our business unless we're helping them grow their business. So there's that real customer push coming. Then there's the regulatory push as well. And so we want to be on the front foot. And in fact, our growers want to be on the front foot, as you would well know, because they can see what's happening in other parts of the world. And in fact, I was talking to some growers the other day in central West New South Wales, and we were talking about some of our programs and their interest and how it works and the dynamic around it. And maybe I shouldn't have been surprised, but I found it very insightful that they said, listen, we think we're doing some good things, we don't have all the answers, but we want to get on the front foot because we feel regulation is going to come harder at us and we want to be positioned, which I found a very insightful comment. So it's going to come from consumers, it's going to come from regulators, it's going to come from everyone's expectations. It's going to come from our employee base's expectations as well, and in the fight for talent. In a country like Australia, with the employment level as it is, so it's multifaceted. And what's also fascinating, this is a personal comment, not a Cargill comment, but I have found it fascinating also now where you do see companies that have made corporate commitments, where not only are they getting punished in brand and reputational sense for not meeting them, but now you're seeing not just regulatory financial penalties, but now criminal penalties in that regard. And you've seen around the world in some companies where it's now going into criminal regulatory frameworks around people making commitments that they are found not to have been progressing. And we just can't afford, as people in this room would be the same, to put our customers in a situation that we expose them to reputational risk, or ourselves, which is why you need to spend a lot of time practically on the science, which is why I say we don't want to spend all our time fighting over science or model. We want to work with the industry on that and regulators and spend our time innovating to our customer value proposition. Long answer, Lucy, but it's multi-layered, I would think. Okay, Max, how am I going?
Thanks. Yeah, run a bit over time, so we might have to move on to the next one.
Right.
But next up.